And we're live.
Hello, everybody. Welcome back. It seems like such a long time since we've gone live on the Simon Dixon YouTube channel, but I'm back and we've been planning out making sure that everybody is up to date in the whole world of change that has happened since last time we were going live on the YouTube channel. So welcome, everybody. Do me a favor, if you can hear me okay, say something in the chat. Hit that like button, and if you're not a subscriber already, make sure you do that. But today we're going to be discussing the only two outcomes that I see that are going to be happening from here after all this incredibly unprecedented increase in the money supply that we are experiencing since the last time that we were going live on the Simon Dixon YouTube channel. So we're going to be discussing those two different outcomes. As always, the first part will be covering some content, and then my goal is to start going live again. We've been planning out a bunch of live sessions that we're going to do starting from now and each and every week, and then we're going to be doing a live session marathon in November. We want to make sure that everyone is up to scratch. It was, can you believe it, almost this time last year that we launched and created the 4 3-part video series on retirementplanb.com, where I was sharing how to prepare for what I think is coming in the economy. So we're going to be doing that. We're going to be revisiting all of that. There's some people that watch that video series and they've had some incredible results. So we're going to be looking and sharing some of that and make sure that everyone knows and keeping you up to date. So the second half of this, we will be covering your questions. If you'd like to get your questions answered, then head over to slido.com or sli.do, slido.com. I think it's both now. And I think it's ST9. Is that correct, Azad? I think Azad's here, but he's probably on mute.
That's correct, ST9.
Okay, so put ST9 in the box there, or you can scan that QR code, and a bunch of questions have already come up. So I'm going to try and keep the content shorter, and we'll try and get through as many questions as we can. So the incredible increase in the money supply that governments all around the world thought was going to be controlled can only really lead to two outcomes. And it's guaranteed to me, I tweeted out this the other day, that we have decided and the world has decided what path it wants to go down. That's being led by two forces. Firstly, a belief and a desire by governments to increase the size of government and solve everyone's problem. And also by decades of training the world to complete government dependency, we've created the trend where people are begging the governments to support them. And the reason that they are begging governments to support them is because they're on the wrong side of the debt-based Ponzi scheme. So I always talked about on my channel that there is two different directions you as an individual can go down. One is getting on the right side or the wrong side of the debt-based Ponzi scheme. And the debt-based Ponzi scheme is saving money and doing what many people would call responsible back in the day. Then the value of that money decreasing as a result of the excessive money printing, and therefore driving you into the usual types of decisions, which is one decision is that you can take on debt as a counterforce for the fact that the price of goods is increasing and your money is buying you less goods, or your currency is buying you less goods. And therefore you take on debt as a counterforce and excessive speculation. And there's two people in that path. The first is those that took on debt to consume, and they're being shafted. They're the ones that are crying out to governments right now stating, please print more money, please create more universal basic income, and please make a counter to the fact that I can't keep up with the results of this debt-based Ponzi scheme, and they're getting on the wrong cycle. The ones that are the richer that are getting richer are playing the existing system, and that is that they're taking that debt and they're managing to get closer and closer to 0% in terms of their borrowing rates, and they're speculating those in stock markets and various other assets. And obviously that's spilled over to Bitcoin as well, as more and more people are seeing Bitcoin as a place to park and beat inflation. At the same time, so those are the two different people, and this is how the rich are getting richer, the poor are getting poorer, and then the poor are then demanding the government to support them because they're on the wrong side of this world's largest regulated debt-based Ponzi scheme called fiat currency. And so that is the path that the governments all around the world are choosing, and central banks are choosing and supporting and aiding and abetting in the crime of the complete depletion of everybody's fiat currency and savings. And so really the path that goes down, and I talked about it over a decade ago, remember, you can still go to retirementplanb.com/book and download a free copy of Bank to the Future, Protect Your Future Before Governments Go Bust. I talked about the different outcomes, but really it's come down to these two. And so the ability for governments right now to choose money printing as a mechanism for subsidizing the incredible debt ceilings that countries like America are encountering right now, where they have to experience almost a government shutdown just because they have to raise the debt ceiling. The reason they have to raise the debt ceiling is because they can no longer pay for all of the obligations that the US government have racked up on the credit card bill. So the US government is essentially bankrupt right now, but they have a tool, and the tool is that they control the supply of the dollar, the digital dollar. And they also have some more tools, which that they've been building and developing as a result of Bitcoin, which is the central bank digital currency. So if you remember back to the 4-part video series, I talked about entering into this monetary renegotiation. So since the video series, we've had every single central bank beta testing, launching, and getting their central bank digital currencies ready. And then the large international organizations getting their central bank currencies ready. And corporations like Facebook getting their stable coins ready to compete with what has been created and within the stable coins that really are collateralized by assets like Bitcoin and various other cryptocurrency assets at the moment. So we're seeing all of those preparations. I still believe that we're going to enter into at some stage a very large systemic risk style event, and that central bank digital currencies are going to be the mechanisms for shifting away from a free market economy into an economy that is organized by a very excessively large government that also has all the technology to integrate their agenda into central bank digital currencies. Essentially a slow shift, a gradual shift, and led the smartest shift you could imagine, leading the people to demand communism. They're not calling it communism. They're not calling it, they may, the word that tends to come around is socialism. But it's a gradual and slow increase in the size of the government using money printing as the mechanism for stealing away your savings through a hidden tax called inflation. So obviously a lot of people have been discussing this in the alternative media, but inflation is really becoming a thing. I don't know if you're experiencing the same thing that I'm experiencing right now, but if you are saving in fiat money, then the ability for you to operate in the current economy is becoming harder and harder and harder. So more and more people are doing many of the things that I told them they would be doing, investing in their social capital as a mechanism for having a brand online where they can take advantage to many of the currency arbitrages by living in one country, earning in another country, and using that as a mechanism to stretch themselves further, because they just simply can't live and afford in the asset price inflation that is being experienced, and being, the ability for them to be able to meet goods. So we've gone from a world where one person could run a whole house to requiring two people to run the house, to requiring all of the children and all additional people to run the house, to requiring everybody to have 2 to 3 roles, and trying to increase the number of hours, to working 24/7 online in order to try and make ends meet. The people are choosing to just decide that the alternative to that is that we go for some kind of government dependency, and that's where everything is moving. So we're forecasting the results of this action is an irreversible force that has committed the monetary policy towards excessive inflation that is now materializing in ways that are very hard for governments and central banks to hide. So they've completely smashed all of their inflation targets. Congratulations, the target that they have set, you have beat the hell out of that target. And we have just had such a ginormous increase in the amount of digital currency out there. There is still backed up by the world's largest regulated Ponzi scheme, where banks are creating that money every time they issue a loan. So the excessive levels of debt and the rich controlling more and more of the assets that they're trying to redeploy into greater and greater speculation is what we're experiencing right now. And therefore, once we get some of the systemic risk events due to this excessive debt-led Ponzi scheme that we're experiencing at the moment, the boogie monster called inflation comes along, and then we have the central bank digital currency solution. Now, the central bank digital currency solution is, to me, that shift towards you at the moment. Even though money at a bank, you can't own it. You don't spend. You can't really spend it as you choose, due to all the laws and regulations that are coming in around how you are able to spend your money. But the final nail in the coffin, after banks being able to create that digital currency every time they issue a loan, is letting those banks go bust, so that they can replace your bank deposits with that central bank digital currency. And of course, in order to protect your savings, you're going to opt into the removal of all those privacies. Now, when I talked about this, during the very beginning of the pandemic, people thought that it was real crazy conspiracy theories, but everything's playing out that way. These central bank digital currencies inevitably going to have an element of control in them, and traceability in them, that is going to remove the complete ownership of privacy and private rights of private goods, which by definition is what communism is. So the excessive money printing, the inflation that's being created as a result of the vast increase in the money supply that is being led by everyday people stating, if you don't pay for this, we won't give you a vote, is leading to the systemic risk event due to the excessive debt that then will be rescued by the central bank digital currency, which will be the slow depletion of all of your privacy and rights, and a slow shift towards the communism that I said was the inevitable result of the debt-based Ponzi scheme that we are experiencing before our very eyes. The only alternative to that, the only sensible alternative, is something that no one will vote for, is something that will lead to the removal of any type of politician that follows that policy, and that is choosing deflation. And choosing deflation means that you decide that the debt ceiling cannot increase any further, or the debt ceiling will not increase any further, and that you will rein in the money supply and try and go through an unwinding process. The economic consequence of choosing that action right now is almost hard to fathom and hard to imagine. So policymakers at the moment, they really don't have any choice to take deflation, because even if they did, the people would blame the impact that this will have upon that politician. So let's say that in the US, Biden decided that it's time to implement more free market policies, rein in the money supply. Not that Trump did that. Trump, increased the money supply because this is systemic. It's not political. It's not partisan. It's a systemic thing where people think, oh no, you've got to have these disaster events and therefore you have these big increases in the money supply. But those disaster events are really just the excuse for rehypothecating the debt-based Ponzi scheme and avoiding the inevitable consequence of the only thing that could save some of free market, which is actually opting for deflation. And deflation is accepting that the rich that are getting richer off all these assets, they are overvalued and they need a correction in order to catch up with real wages out there in the real economy so that people can actually afford their own real estate and afford their own property. And that would be, a correction if all the money that has been inflated into this asset price inflation at the moment. And no government is going to choose that. So really the writing is on the wall. The policy has been set. And although there are only two real outcomes, and that is a radical banking reform whereby you choose deflation, you don't increase the debt level, you unwind the excessive levels of debt, which would lead to a deflationary spiral, which is exactly what governments have said they want to avoid. So the only other choice is to choose the policy that they are taking. This means that this is the complete destruction of the money supply as we know it today. That has been increased at a rate that we have never seen before. There's no desire to increase interest rates in order to try and combat some of that because they don't want to move into a deflationary spiral. So the moral of the story is that the two outcomes is one is very undesirable, which is the solution, the preservation of moving back to some kind of free market forces by accepting that we need deflation, we need an increase in interest rates, and that would create a spiral recession depression. So instead, they'll always choose the increase in the money supply, the inflation that then leads to either way, either one of those outcomes leads to central bank digital currencies being the solution that is especially in a deflationary spiral. So if we enter into any kind of systemic risk event from here, if you didn't catch it, I created a video recently on the Simon Dixon YouTube channel on whether we're in stagflation and why markets were crashing at the time. Make sure you check that out. I went through. So if we enter into a deflationary spiral, same outcome. That would create systemic risk event in the financial system. It would have an unwinding effect on the debt-based Ponzi scheme, and it would inevitably lead back in the other direction where they increase the money supply through the issuance of a central bank digital currency in order to preserve people's deposits in a deflationary spiral. So you as an investor need to make sure that you're on the right side of that. And so we want to go live again so that we can make sure that everyone understands some of the things that we've been implementing in order to build and protect the wealth. And we're going to make sure that we're arming everybody and answering all their questions and doing a bit of a marathon in November around some long, large sessions to get all of your questions answered and make sure that everyone's reacting accordingly. So the two outcomes that we talked about is either inflation, which is what the government is choosing, which leads to the unwinding of free markets and capitalism over to communism through central bank digital currencies. They will never call it communism. They'll just, but we're already in we're already merging towards the United Soviet States of America. And at the same time, the solution, deflation, because the Ponzi scheme has got so far, will still lead to the same inevitable result where you have to save the financial system through the issuance of central bank digital currencies, and then that shifts back into the same thing where they choose inflation. So it was a bit of a thing, only two outcomes, but really there's only one. And so the writing's on the wall there. And we want to make sure that we're covering as much content as possible to help people through that. So Azad, I think there was a ton of questions there. So let's jump into the AMA segment and let's see how many questions we can get answered in the 40 minutes that we've got left. If you're enjoying this as well, then please do hit the like button. The Simon Dixon YouTube channel has been sleeping for a while. We're waking it back up again. And we had so many requests to go live again and people missing content. We were doing a lot of content on the Bank to the Future YouTube channel, more really focused around investors. But let's jump into the AMA section now.
Yep, the first question is from KDB. Hey, Simon, happy user here and a big fan. Could you confirm if Celsius equity round will happen at Bank to the Future?
So this is more of a Bank to the Future question. So at Bank to the Future, we help people invest in fintech and financial technology companies, mainly centered around investing in Bitcoin, an essential part of how I build my portfolio to combat many of these forces. Private equity has been one of the highest performing asset classes throughout this whole thing. And Celsius just recently announced they did a funding round with us at 120 million, and they recently announced a $3 billion valuation. We created a video update on that on the Bank to the Future YouTube channel, so I'd refer you back to that. But at the moment, at Bank to the Future, we're focusing on supporting people with their retirement plans. And we're applying for some additional licenses, and it all depends on the timing with regulators. If Celsius is still looking to bring in their community at that stage, then you can get those updates by subscribing to the Bank to the Future YouTube channel. Next question.
We hear a lot about US printing. Could you give us some UK info, please?
So the US is really the world reserve currency, so it affects everything else. In terms of UK follows very similar policies. I haven't got the exact numbers in front of you, but the US is driving this whole force because everything is about the dollar at the moment. And so if we're shifting from a dollar-led world to any type of monetary renegotiation, basket of currencies, central bank digital currencies competing, then everything else really gets dragged along with that. So we're moving to more of a unification. But in terms of the money supply, just do a Google search, do UK M0, UK M1, and you can get the different, you can see some charts there where everything is going through the roof in order to subsidize, because you have to remember, the government can never pay off its debt. That is the deflationary spiral. If the government ever paid off its debt so we can stop pretending, then that would be such a contraction in the money supply that it would lead to the Great Depression of the 2020s that I was always forecasting over these years. But you look at inflation in the UK, it's actually one of the highest affected economies out there, other than the countries that are experiencing the complete destruction of their currencies at the moment. And the impact that that's having on middle class people, people that had really good careers and jobs in countries like Lebanon and various other countries that are having their currencies destroyed. It's really is a moral problem. And if you look at the charts in the UK, inflation, it's definitely, they are kicking the shit out of all their inflation targets. Let's put it that way.
Mark from Edinburgh, when CBDC eventually happens after the banking collapse, will you be able to opt out? Will there be an alternative? Will there be currency wars? A CBDC is a slave coin, and I want no part, neither should anyone else that believes in freedom.
Yeah, so let's take those questions one at a time. So CBDC is central bank digital currency. So take the first one because my brain can't process that many questions at once. What was the first one, Azad?
So the first one is, when CBDC eventually happens after the banking collapse, will you be able to opt out?
The only way to opt out is to hold your funds in assets that are not connected to the banking system. So if you hold funds at a bank, and the forecast that I predicted becomes true, which is that there's systemic risk of a bank event in the financial system, and they give you the option to swap your central bank digital currency from money that was created as a debt-based Ponzi scheme within a bank. So you're swapping one Ponzi scheme for actually not a Ponzi scheme, but the removal of your freedom, as you talk about. So there's actually quite sound principles in the money supply being created by a central bank, at least not pretending or being backed by debt or anything like that. But you have to go to the whims of the central bankers in terms of controlling its supply, which have always bowed down to pressure from governments or agendas to increase its supply, which is what we've seen consistently. Then the only way to opt out is to have the vast majority of your wealth in something that exists outside the banking system. So if you want to protect, in the retirement plan B strategy, we have Bitcoin and various other assets. And then if you're looking to protect against failures in internet and various other things in complete disaster events, then you have hard assets like gold as well. So that's why so much money is going in. People ask, these vast wealthy people, why are they actually investing in bonds? Why are they lending to the governments in treasuries, even though the abysmal, yield that you can get at the moment is because they don't want their money in a bank? Because when you hold your money in treasury, you are exchanging bank risk for government credit rating. And so even though the returns are negative in real terms of holding treasuries and bonds, why are people doing it? Because they don't want to hold it at a bank, whereas moving towards negative interest rates and the money is not yours. And so therefore treasuries becomes a way, even if the returns are negative, of actually protecting some of your wealth. Personally, I believe a better, if you have with savings, for me, is Bitcoin and many of the hedges that I put into that as well, around stabilizing some of the volatility in that. So yes, you will be able to opt out. Next question in that.
Will there be an alternative?
So will there be an alternative? If your money at a bank and that bank is going through some kind of bail-in, might be that you are offered equity or stock in that bank, which is what we've seen in some bail-ins. Bailout is that the government could decide not to issue the central bank digital currency and instead just you pay for it through inflation, and they do it through the existing bailouts. Or they can just allow you to swap your money, or you can just give up that money and put it into something that exists outside the banking system in terms of alternatives. Next question.
Will there be currency wars?
Absolutely. Currency wars are already starting. There certainly is vested interests all around the world that certainly want to take over the dollar and gain some of that power and control. So all of the many countries are lining up for that, many international organizations, and everybody's deciding what position they want to be, getting ready for certainly some of these currency wars. Next part.
I think the other one was just a statement where they don't want no part of the CBDC is a slave coin, and they don't want no part. So the next question we've got is from Rob. Can we trust stablecoins such as USDC and Tether over our retail banks?
So there are different risks. So the money that you hold at a bank is subject to the credit rating of that bank and how they're managing those funds and the risk profile, which is also multiplied by the systemic risk of the whole system. So even if they were a very responsible bank, unless they're actually a trust company, or they are set up to actually non-leverage those funds and not rehypothecate, then they're also at the mercy of the systemic risk event of the entire system. And then you add to that risk, multiply it by the likelihood of their insurance paying. And because the banking system is only insured up to 1% of total deposits in many countries, then the insurance gets tapped out at about the 1% mark. So one or two major banks, then the insurance doesn't work anymore. And so then you're on the credit rating of the government, or the ability for them to use central bank digital currencies as a new money supply to introduce into that, not backed by debt. Now, what's the risk with stablecoins? Well, stablecoins are issued by a centralized company or a decentralized algorithm. So if you choose USDC, then you are looking at the auditability of the backing of that currency, multiplied by regulatory risk, i.e. governments all around the world, now that stable coins have been statistically significant in the supply of money and the mechanism, and they're so vastly superior as a mechanism for making international payments, that's starting to get a lot of traction and a lot of volume. But then you have to start to look at the issuer. And so in the case of USDC, then the issuer is, full disclosure, a company that I'm a shareholder in, which is Circle, and another company that I'm a shareholder in, which is Coinbase, that have jointly put that together, but Circle is the main issuer there. And so you're looking at the auditability of that, multiplied by the regulatory risk that they decide to do something there. And then if you're trying to avoid some of those, not trusting the auditability, then you start looking at more decentralized algorithmic stable coins, like DAI, for example. But then you've got smart contract and hacker risk. So the key here is not putting everything into one risk. It's risk management, it's risk mitigation, it's understanding what risks you're involved in when engaging in these different asset classes, and then putting together a strategy to manage some of those risks. That's what I attempted to give to everybody when last year we did the free 4-part video series at retirementplanb.com. And when we do the live marathon, we're going to go deeper into many of those things through a live session as well. But it's risk mitigation, risk management, and understanding that these are different risks as opposed to putting all your eggs in one basket. Obviously, with stable coins, the yield you can receive at the moment when you take another risk with that stable coin, which is using it when people use it as collateral in order to get loans, they pay interest out there, and the interest that they pay is either done through decentralized finance DeFi contracts, or it's done through a centralized company that puts together these mechanisms. Then you have the collateral that's being, as a mechanism rather than with a bank or credit rating. And many banks do collateralized lending as well in the traditional markets, but it's become a high yielding product in crypto. And that moves it over to more of an investment product risk where you have counterparty risks and various other things. So I don't want to go too geeky into it, but it's just understanding the risk and diversifying accordingly and preparing for different eventualities. Next question.
What are the differences, if any, between the Federal Reserve and the European Central Bank money creation?
So really, it's just the strength of the currency that's behind it, and it's the policy of those central banks. So in Europe, it's slightly difficult because in order to, because it's a group of countries that are part of in one currency, which is why Brexit was such an interesting event, because Britain managed to negotiate the best of both worlds. They managed to get all the access of being involved in international agreements through Europe, but they got to keep their own currency and keep control of their own money supply. And it's ironic that the one that got the best deal was the one that decided to leave first, because they weren't at the mercy of the euro. But the challenge with the euro is that when the euro is being created and printed, then really you are under the control of big Germany. So Europe is just another code word for big Germany, which is the most statistically important economy within Europe. And then the others have to come along and beg and steal, lie and cheat in order to try and get access to some of those euros, which you opt into. So there's more of a controlled environment. It's more bureaucratic. Whereas when it comes to the Federal Reserve, then the Federal Reserve has their policies and their committees that can decide whether they're going to be engaging in their open market operations or quantitative easing, which is really often swayed by politics, even though politicians are meant to be independent of those central bankers. And they have to come up with all sorts of interesting mechanisms to meet their inflation targets, including fudging the inflation numbers and making them less reflective of reality of the everyday person.
Okay, how do you think Bitcoin will react when markets crash?
So Bitcoin has very much become a risk asset investment. So many people are treating Bitcoin as an investment. More and more institutions, more and more companies, more and more individuals, more and more everyday people, more and more high net worth has been the trend. The market is incredibly large and liquid now relative to what it has been, but that's just been a trend of growing each and every year ever since I've been involved. But I would expect market manipulators and people that generally are taking money out of risk assets to cause corrections. As we saw during the pandemic, you initially get corrections in all risk assets together. I'd expect some kind of correlation there of people taking their money out of risk assets, but then the real fundamentals of Bitcoin eventually kick in the long term, which is the ability to own your own money, spend your own money, and a money supply that can't change. So the market manipulators in Bitcoin know that's how people react. So they use their vast Bitcoin wealth in order to manipulate the prices, crash the prices down, and then accumulate some of those Bitcoins from the fearful that think that the crash is not going to return. Why? Here's the key fundamental difference. People that are thinking in terms of Bitcoin as a mechanism for making more fiat are the very same people that get very scared and jittery when Bitcoin starts crashing, because they calculate the reduction in their fiat money purchasing power as a result of the price of Bitcoin going down. Those that understand, that are on the other side of this equation, are the people that are seeing fiat as a mechanism for accumulating more Bitcoin. And that means that when the price goes down, those that are thinking of fiat as a mechanism for accumulating more Bitcoin are thinking of a crash as a brilliant opportunity to increase their Bitcoin wealth. Those that see Bitcoin as a mechanism for making more fiat will always try and call the tops, call the bottoms, try and trade in order to figure out when, because they're thinking in terms of, how do I use it in order to pay my rent? Now, I appreciate and understand if you're living month to month, then it's incredibly difficult to get yourself in a position where you're thinking of Bitcoin, as fiat as a mechanism for making more Bitcoin, rather than Bitcoin being a mechanism for making more fiat. But this is going to be the difference between those that get on the right side of the wealth redistribution, from my perspective, and those that get on the wrong side of that. And so if you're thinking like this, then corrections are brilliant opportunities to accumulate more Bitcoin. I would discourage market timing because everyone gets it wrong. And really putting more mechanics around Bitcoin accumulation with fiat as a mechanism. And so really fiat is a great mechanism, and this is how the subtle psychological shifts. If people can make these shifts, then this is the key to really, from my perspective, getting on the right side of this. So your goods are priced in your local currency, most likely. So let's say you you live in England. Excuse me. You have to pay your rent in pounds, or you have to pay your mortgage in pounds. You have to pay your food in pounds. Now, what were you taught? You were taught, spend less than you earn, invest the difference. Traditional investing 101. The only difference is most people use that as a mechanism to say, well, I'll save up as much pounds as I can in that example. They try to spend less than they earn, they put pounds, and those pounds go down in value and they get punished by the debt-based Ponzi scheme. And so then they are driven to some kind of speculation, mainly and then the lower the price of Bitcoin goes, the more you can accumulate Bitcoin with your fiat. That's the shift. The opposite of that, as I said, is people looking at how they can put some of it into Bitcoin, and then they think of it and still, all right, but I need to pay my rent, I need to pay off my property or whatever that is. And so they end up trading and trying to call tops and bottoms. And it's just a typical cycle. And it's because they're still thinking in terms of how can I use Bitcoin as a mechanism for accumulating more fiat? Now, eventually, here's the irony. The irony of the situation is that the people that I have known who have seen fiat as a mechanism for accumulating more Bitcoin over the last decade have become some of the wealthiest people. They can draw out enough fiat, and that fiat can then provide some kind of security blanket, cover their expenses without having to take currency risk. But then they have enough left over in order to actually think of fiat as a mechanism for accumulating more Bitcoin. When people think that way, this is really the key to be able to hedge away from some of this debt-based Ponzi scheme risks. And you've got to come from a longer term perspective. The beauty is about this, anybody that can get themselves in a position where they can spend less than they earn, and I understand some people are just not in that position, but if they can get themselves in a position where they can spend less than they earn, then they can get on the right side of this cycle, even if it's small. Because many people, they're like, I don't want to buy a Bitcoin. It costs, what is it? $55,000. I haven't got $55,000. And so they start looking at alternative cryptocurrencies, and then they're in the risk play, not really fulfilling that. So again, we're going to cover a lot more about this in the live marathon, so that people can really understand how to get on the different psychological barriers that people need to overcome as this whole system unfolds. That was a really long answer. Let me try and do shorter ones. We've got 15 minutes to cover more questions.
Do you think the European Union project will survive the upcoming monetary reset, or it will revert to individual nation states?
I don't see the unwinding of the European Union. I see consolidation of power, and I think it's they will use the euro, the central bank digital currency version of the euro, as a tool and mechanism for using and buying up many of those countries' assets. So I see consolidation of power. I don't see many that actually happening. But then again, anything can happen. In these currency wars, people could decide that they the reason it was easy for Britain to do that is because they kept the pound, and so they maintained some of their ability to go in and out. But those that are stuck to the euros, they could decide complete monetary renegotiation, issue our own central bank digital currency, leave the euro. But I would see more consolidation of power as a more likely, and less, you got to separate the European Union, which is agreements of free trade between countries, which are good things, versus consolidation of power in the European central bank, and removal of power and freedoms for individual countries.
Next question from Ian Sims. Hi, Simon. I was wondering if the big guys such as Vanguard, BlackRock, and State Street are buying up Bitcoin. And if so, surely they could control and manipulate Bitcoin.
Every financial, well, okay, so there's a few questions, there's a few parts to that. Firstly, the individuals behind all these organizations, they're all in. They were all in a long time ago. I can't speak for everybody, but about, I think it was about 5 years ago, a bank called Jefferies Investment Bank engaged me to go and speak to all of their fund managers. This was around the time that the banks were trying to take down Bitcoin by popularizing blockchain. And Blythe Masters created, I can't remember what it was called, I think Digital Assets Holding or something. And Blythe Masters was the person that created the credit default swap, the product that took down the entire financial system through its insurance of the mortgage-backed securities and asset-backed securities. And Blythe Masters, her second gift to the world was telling everyone not to buy Bitcoin, but to invest in blockchain. And so the bank, she was going around telling all the banks, and after that, I was engaged by this bank to go around and speak to all of their fund managers that were pretty much controlling most of the wealth in the world about Bitcoin. My job was to unwind the Blythe Masters effect and give them an alternative pitch. So many of them were investing in blockchain, and they've ended up with stuff that's done nothing. And a bunch of companies that have not really made any progress through their inefficient databases that don't require decentralization in order to put efficiency. And instead, many of them, purchased Bitcoin personally. They couldn't do it through their financial institutions because they had to go through a custodian, but there's been a wave of innovation in custody. And now there's a wave of innovation happening in institutional products that give you exposure to Bitcoin. So unfortunately, most of them have to do it in a very silly way, which is why you end up with companies like Grayscale, who are often at a premium or discount to Bitcoin because everyone's trying to get it in their retirement plan or pensions. And they're all applying for ETFs, and they end up with 100,000, 200,000 Bitcoin on custody, and but they're not rehypothecating that. What is my guess? I don't fully know, but they end up just being in those and not for use, so that they can start manipulating markets and sending it to exchanges. So the manipulators tend to be people that own their own private keys. They send a bunch of Bitcoin to the exchange, and then people start getting the jitters about a whale sending a bunch of Bitcoin to an exchange because they think it's a sell pressure. And then they use that to accumulate a lot more Bitcoin at a cheaper rate through that exchange. Those are the typical market manipulation behavior. When you do that through regulated financial institutions, unless it's done through a bank where a bank can rehypothecate your Bitcoin, then you don't tend to get those effects through that. But I'm sure they're going to innovate all sorts of financial products. But the difference here is many of the lending products are being built in the Bitcoin and crypto. While we're creating all of the same financial products in Bitcoin and crypto, the key difference is it's being based upon collateral rather than money being created as debt with the fiat money. So yes, I do believe that there will be centralized pockets of controls that control a lot of Bitcoin through custodians. Ideally, everything will be more distributed, but most people will look for their traditional companies in order to gain exposure as these more and more products get approved out there.
Simon, how do you see the Canadian fiat dollar in all of this? Same timelines as the USD. Canada doesn't have any gold in the vaults either, and printed a ton of currency throughout 2008 to COVID.
Yeah, the interesting thing about Canada is in 2014, when I first started talking about central bank digital currencies, I first became aware of it. Well, firstly, in the book Bank to the Future, Protect Your Future Before Governments Go Bust, I talked about how new supplies would be created that are not backed by debt. I just didn't know that these things would be called central bank digital currencies at the time. There was no such terminology at the time, but it was talking about how that's an inevitable consequence of the deleveraging of the economy. Now, when I first became aware of it was in 2014, there was something called CAD coin. And CADcoin was actually a wallet. It was the very first central bank digital currency to be launched. No one talks about it now today. I don't know where the status of the project is, but in 2014, I was able to download an app and gain access to CADcoin, and you could connect it to your PayPal account and buy some CADcoins. It will be interesting if anyone finds out whatever actually happened to that project. But Canada were actually the leaders in this whole movement. Now, later came China, which was the one that everyone talked about. And then round about 2016, if you look back at the archives of YouTube channel, I went on Hong Kong television where I was talking about how China issuing their central bank digital currency by PBOC is actually radical banking reform, not as radical as countries that are outside of not run by communist parties, where the government actually controls most private ownership of many of the institutions. But that was really the first introduction there. So there's a bit of trivia there. So Canada was a market leader, and from all I'm seeing with countries, I think Canada has a bit more of a conservative policy, but this is the inevitable consequence of any country that uses the model of creating money as debt through the banking system. The only consequence of that is that you end up with two rules. In order to have more money, you have to have more debt. And if you want less debt, then you have to have less money. So they always choose more debt when you back a currency by the level of indebtedness. And that leads to individuals, corporations, and governments massively increasing money supply or slowly over time in order to combat systemic risk events. And Canada is no different.
Question from Simon London. Can you please expand on the new regulations considering crypto and KYC? I have to hand over a ridiculous amount of personal information recently.
So the regulations are only moving in one direction, and that is regulations are getting more and more aggressive on every single company in order to collect more and more data. Is the inevitable consequence of during 9/11, when they introduced many of the different rules and policies centered around counterterrorism, that was really accelerated during the pandemic, which was the removal of privacy. The complete, the counterterrorism led to you not being able to control your money in the same way, and you having to give additional data with every single movement and flow. That then led to where we are today, where people have just accepted that. So every single crypto company is being told by their regulator that they need to do more. They need to collect more data. At BnkToTheFuture, we've been working with our regulator in order to comply with those requirements. And that is the world that we live in today. That if you are engaging in the fiat monetary system, if you are offboarding a fiat into crypto, then really let's talk about what this actually is. It's obviously tax collection, and so this is a combat to how the movement away, the movement towards collecting more tax is what it actually is, and anti-money laundering is a side effect of that. And financial institutions are the mechanism for which to collect all of that data, and that is just what the price that anyone pays of engaging in the financial system. And so, regulatory crackdown is certainly happening at most crypto companies. At BnkToTheFuture, we've always made sure that we're transparent. We tell people that in order to engage in these services, then you need to provide certain data, and our regulators have asked for more data, so we have to do that in order to have that service.
Chris asks, seeing Bloomberg reports on Tether recently, that is there a systemic risk to crypto in general if they invest in risky investments instead of keeping secured against actual dollars and maybe T-bills?
Yeah, so Tether, full disclosure, I am a shareholder in Bitfinex, and Bitfinex is the same management team that run Tether, that launched Tether, and the Tether story is that they were the very first movers in the industry. They suffered some challenges with their banking relationships because they became so systemically large. And then later they had some challenges where, in order to service the payments, they had to use a shadow bank, and that shadow bank ended up with certain governments seizing assets, which led to a hole in the backing of Tether. And then they've been more recently doing certain audits and repaying loans and things like that. But Tether still just grew and grew and grew throughout this whole thing because it's a very, very useful product. It's more and more people are willing to accept Tether as payments, and it's just a lot faster and more efficient way of sending money all around the world without the volatility of crypto when you're actually getting involved in payments that need to be fixed to fiat currency short term. There is obviously a counterparty risk there, which is the believability of the backing, and the regulatory risks as well around governments looking to target. Bitfinex has been a very anti-fragile company in terms of countering it, but there's only so much a company can do. And so those are genuine counterparty risks when engaging in things like Tether and USDT. Now, what was the second part of the question?
So instead of keeping secured against actual dollars and maybe T-bills.
So they've recently started to publish more data around how those funds are backed and how they're used. That's a risk to be managed when you're engaging with stablecoins.
Okay, I guess this is going to be the last final question because we are up to that hour now. Question from Dom, do you think banks will be forced to adopt Bitcoin as a way to counteract CBDCs? My thinking being that CBDCs could effectively make banks defunct. Thanks for all you're doing. Peace.
Very interesting concept, and any smart bank, from my perspective, if they can get over the regulatory hurdles, is figuring out how to offer Bitcoin financial services, hold some of that Bitcoin in reserves, and make that part of their asset base as well. Whether regulations will allow them to do that is another thing. But many regulations have been implemented that allowing banks to engage in Bitcoin and crypto financial services. So the smart banks certainly will be doing that. But from what I'm seeing is mainly the individuals behind the banks that are looking at Bitcoin as a mechanism for increasing their wealth and hedging against some of the risks that we're talking about that they're engaging with in their own banks. Remember, this is all systemic, and it tends to be individuals looking out for them. The financial institutions can certainly engage in embracing Bitcoin as a mechanism for combat being taken down by central bank digital currencies. I think that's a brilliant idea, and something that definitely should be explored by any responsible bank out there, even though that most people would say that's vastly irresponsible. Thank you, everybody, for those questions. That's all we got time for, unfortunately. I'm sure there was a lot more questions, but here's our commitment. So the Simon Dixon YouTube channel is back for the rest of this year, moving in from October to November before we start to hit the festive period. I'm going to be going live. We're planning out a big live event marathon, where we're going to be doing longer sessions and going deeper into content. So if anyone would like to leave in the comments section what they would like us to do, because we're here to serve and we'd like to give more and more resources to people that are looking to get some of their questions answered and really deliver as much value and as much content as we can for you. If you've enjoyed this, do me a favor. We need to wake up the YouTube channel again. YouTube algorithms are not used to it, so it would really help if you hit that like button, if you shared it across your social media, and also make sure that you get the notifications from YouTube for all of the content that we're planning ahead. So if you hit the subscribe button, hit that bell symbol, and hit all, then in theory, YouTube is meant to notify you every time we go live. I'm not sure if you're still getting those notifications, but all of your help in order to get more people to this, we want to deliver a really energized by engagement and the more people that can be a part of this. And haven't said it for a long time, but always remember, you are alive at one of the most interesting and exciting times in financial history. And I want you to be on the right side of that change. Peace.